Hey, I hope you guys are doing well. So good to see you. I hope everybody's having a great day. My name is Dr. Boyce Watkins, and welcome to the Black Financial Channel. And I hope you guys can hear me all right. Give me a yes if you can hear me. Let me know in the chat if I'm coming through all right. I don't have good lighting because whenever I travel, my lighting is just ridiculously bad. So I hope that that's okay. If we can work through that together, I appreciate that very much. Also, I want to let you guys know if you want to get financial conversation in your ear as you go to work or while you're in the gym, stuff like that. We also have a podcast called Dr. Boyce Daily, which is on Spotify, where every day I kind of give you some updates on what's going on with the stock market, because the stock market and investing, that's an important part of wealth. And I hope you guys will consider increasing the amount of investing that you're doing. Not just start, but I want you to really do it. I want you to be assertive about it. So anyway, can you guys hear me? Give me a guess if you can hear me okay. Let me know if I'm coming through all right. Good morning, Hazel and Alex and DJ360. Yoshika Garner. I see you, sister. Yoshika has been around for a long time, and I appreciate you so much. Leroy Dawson, Jeremy Rushing, good to see you. All right, so let's hop in here. How many of you saw the stock market kind of get pummeled last week? Anybody see that? Let me know. Give me a yes if you saw your stocks and you were just kind of like, "Oh man, this is crazy." Well, basically, here's a headline in CNBC that can help give some perspective on this. It says S&P 500 tumbles Friday to post the worst week since 2023. So this is the worst week you've had in a while. The Nasdaq drops 2% for the worst weekly performance since 2022. So tech stocks are getting body slammed even more than regular stocks across the board. So it's been kind of an ugly time. It's a really ugly time right now for the market. And if you are already an owner, then yeah, you took some hits. Now remember that the loss is not what they call a realized loss. So it's not a real loss yet. You still own the same stock that you had before. It's just that in the market it's worth less. So really you can think about it like I'm married to my wife. And so if somebody says, Dr. Boyce, you gained 20 pounds, and fat men don't do as well on the dating scene as fit, healthy men do. That doesn't mean that my life has changed significantly, because I'm not looking for a girlfriend. I'm not looking for a relationship. I already got one. My wife is locked in, whether she likes it or not. Right now, now maybe an argument could be made like, hey, you better get in shape, or eventually your wife won't even like you no more. Well, that means I have a long-term move that I can make to get better. I have time. I have time. Time is your friend when it comes to investing. So basically, if you want to know what I do when the market kind of does this, when the market kind of goes south like that, patience. I just sit and wait. I sit and, just like if somebody tells me it's raining outside, well, I don't have to go outside right now. Do you understand? When you go outside, that's when you feel the rain. Just like the dating analogy. The only time I would know that that fat men can't get a date is if I go outside and I try to go get a date. Well, I'm not going to date nobody. I don't ever want to date anybody because I'm married to my wife. But if let's say that I was thinking about ending the relationship, well, I might say, let me get in shape first, and then then I'll go outside, right? But no offense to my wife. I love her. She's beautiful, and I ain't trading that in for nothing. Okay, that's the best investment I ever made. But anyway, with that said, if you hang around to the end of the video, I'll give you a stock that I'm buying right now that can help you to make some money. And so Sonora says, "What an analogy!" I hope that was a compliment, but maybe that was kind of like an insult. Maybe she's like saying, "You're dissing your wife." I am not dissing my wife, so I love her. And if it sounded that way, then please just chalk it up to my stupidity. All right. So anyway, hit the thumbs up button, thumbs up, share, subscribe. My name's Dr. Boyce Watkins, and also later on today we are going to have Money in the Morning, which is our economic elevation training that we do every single day for free to the community. If you'd like to sign up and join us, just go to b1moneytips.com. The number one, b1moneytips.com. And there's a free class. This is 100% free to anybody in the community that wants to learn. If you want to grow your wealth, you want to be smart about your money and get your money right, because so many people are struggling. So many people don't understand this. So many people are scared of it. I talked to my cousin yesterday for a couple hours, and he was asking me a lot of stuff that was there was a natural point of confusion for a lot of people. And I just said, yo, bro, look, the answers are out there. Just join us in class. So you can go to b1moneytips.com and you can join that class for free. So never let anybody make you think the Black Business School, you have to be rich to be a part of the Black Business School. No, we have thousands and thousands, hundreds hundreds of thousands of people that benefit from what we do. So just go to b1moneytips.com and you can get started. All right, so let me finish telling you guys about what's going on with this market. So I'm gonna read this article. It says the S&P 500 dropped Friday, notching its worst week since March 2023 as investors assess the fallout from a weak August jobs report and ditched leading tech stocks. So basically, what's happened is the jobs report answered a critical question when it came to the market. It basically says, yeah, you are headed toward a recession. That's what the jobs report said. The jobs report said it's weak. The economy's weak and it's getting weaker. And you're almost like when you're catching a cold and you're like, oh gosh, I sneezed twice. Am I getting a cold? Well, let's say you sneeze 5 more times and then your nose starts running. Then you're like, oh man, I think I'm getting sick. Right. You know what I mean? So that's kind of what's going on. They're trying to figure out, is the economy catching a cold? Well, the answer is pretty much yes. So what's going to happen now, though, and the reason what I'm hoping for, what I'm kind of looking for, is that when the economy catches a cold, the Fed brings the cold medicine. The Fed comes in with some NyQuil and some Robitussin and some Kleenex and some cough drops and tries to help the economy get better. So what does that mean? Well, that means that there is some non-trivial, some significant likelihood that right after you had the worst week of your life last week, you could have the best week of your life next week. Right after the market says, oh gosh, this is the worst week since 2022, next week could be the best week since 2022. That these are these reversals. This is what I wrote about in my dissertation. This happens all the time. It's not a guarantee, though. It's not a guarantee. So I don't think you should ever fall for the idea that you should always buy the dip, because sometimes you buy the dip and you just keep on dip, baby, dipping, right? So if the economy keeps on getting worse, if the market keeps getting worse, then that can accelerate the losses. So this is so one philosophy I believe in is preparing for the worst and hoping for the best. So that means that if you're using things like put options and other things to protect your portfolio, we've done things on the economics of self defense. We've also done things on storm-proof investing. Then stick with that, right? You got to be safe first. But I'm positioned for a rally next week. I'm positioned for a rebound. And so, let's see. We'll see if I'm right. Maybe this week will be wrong. I don't know. I'm wrong all the time. A lot of us are wrong. But I think that this decline is going to be met by some significant Fed signaling, Fed action from the Federal Reserve, where they say, hey, we think we're probably going to, reduce interest rates, by half a basis point or sorry, by 50 basis points instead of 25 basis points. And that right there can create a rally. So, because remember, they're invested in the same stocks you are. So part of the way to get rich is to put your money where rich people put their money. And most rich people put their money in the stock market. All right. So anyway, I didn't want to keep you guys for too long. I'm going to read a little bit more of this article and then we're going to bounce out for today. And then don't let me forget to give you the stock that I am buying right now. All right. So basically it says here, this is interesting. Someone named John Hancock or someone named Emily Rowland from John Hancock Investment Management. Her name's not John Hancock. She says it's a sentiment-driven move that's largely driven by growth concerns. The market's oscillating between this idea of is bad news or is bad news good news, and the sense that it may revive hopes that the Fed moves more aggressively than markets anticipate. Let me interpret that. Let me break that down for you. What she's basically saying is that it's sentiment-driven. That means that it's emotional. See, the stock market is a drama queen. It's like, oh, the world's coming to an end. Oh, everything's going to be good. Oh, the world's coming to an end. Happy days are here again, right? So it's bipolar. And what also tends to happen is that when the market has a big drop like that, there's a high probability of significant overreaction. So what I really see is I'm like, is this really going? I do anybody got kids? How many of y'all got kids? Anybody got kids in here? Crazy kids? I got teenage girls in my house. So with teenage girls, emotional regulation can be a challenge. And so you're really kind of like, when they say, okay, is your life really, you say, my life is over. Oh my God. Well, is your life really over? Let's really look at this. Let's really think about this. Well, let's spend some time and think about it for a little while. Let's process this for a day. And so the market's reacting pretty strongly, but I have this strong feeling that Monday or Tuesday could be a really good day. I think that once the market processes the information a little bit better, you're gonna see. You could see. I'm not gonna say you're gonna see because I don't want to make those predictions, but there's a strong probability that you could see the market really move in a positive direction. And also, what she's saying about the market oscillating between this idea of whether bad news is bad news or is bad news good news goes back to the point that I made earlier about the Fed intervening. Right, the Fed has strong medicine for the economy. The Fed is they position themselves almost like these economic gods that can come in and take a bad situation and make it really good. They have a term for this in finance called the Fed put. And basically what it just means is that whenever something goes wrong, the Fed intervenes like really heavily and it pushes everything up and it kind of creates this artificial controlled sort of economy. And so some people would say that bad news isn't bad news. Bad news is good news because bad news means the Fed is going to come in and manufacture good news. They're going to manufacture a positive outcome. Do you get what I'm saying? So sometimes when this is what's really confusing is that sometimes you get bad economic news and people and the market actually reacts positively because they're like, oh yeah, the Fed's coming. The Fed's got that good medicine. They got that good dope. They're gonna come and inject. They're gonna inject the stock market with some crack, and it's gonna be going. It's gonna be on fire. Is that healthy long term? No, it's not. I was talking to my cousin yesterday about drugs, and drugs are bad. We were talking about friends we know who die from drug overdoses and everything else. So say no to drugs. But the economic drugs, I think sometimes they can work if they're used in moderation. But if they're used a little bit too much, like the Fed tends to overuse them, it does cause long term problems. Like right now, the $37 trillion in debt that we have is very unhealthy and unsustainable. Also, we have some significant economic problems. Consumer debt is at an all-time high. Credit card debts at an all-time high. Auto loan debts at an all-time high. Student loan debts at an all-time high. Mortgage loan debts at an all-time high. Eventually, that's going to cause you some issues. That's going to cause some problems. So my biggest piece of I wouldn't call it advice. I do not give investing advice on this channel ever. But my thought on that is be really careful with that. If it doesn't make sense, then don't do it. Debt is not always bad, but too much debt can be very toxic. All right. So anyway, do me a favor, hit the thumbs up button, thumbs up, share, subscribe. And I want everybody to know that in the Black Business School, to give everybody a chance to kind of try out some of our programs, we created a very special limited time $7 a month membership that you can sign up for. It's very limited. It's not going to be around for long, but if you'd like to take a look, go to b1accesspass.com, b1accesspass.com. And there's literally a bunch of programs you can get access to. The stock market investing mini class. You can get access to our mini class on entrepreneurship. You can get access to stormproof investing, a training I did on how to protect your portfolio. So if you go to b1accesspass.com, you can actually give it a try and try the $7 a month membership and see if you like it. And if you like it, maybe you can do more with the Black Business School. So you can't do better than that. We give you something better than your university gave you, and it's $7 a month. So feel free to go to b1accesspass.com. All right. So I mentioned the stock that I like right now that I'm going to buy. That again, this is not investing advice, but this is a stock that I like, a stock that I'm going to take a look at, and it's Talos Energy, TALOS, and the ticker symbol is Tallo, TALO. TALO. Somebody type TALO in the chat. That's the ticker symbol, TALO. Again, this is not, there's no guarantee with any stock out here, but this is a stock that I like because a lot of assessments say there's a high likelihood it could be underpriced. Also, the market has dipped. So this is the time. If you got that extra cash, this is the time to jump in. This is when you go. I'm not telling you to go. I'm saying I'm gonna go. And if you want to know what I think, this is what I think. This is not investing advice. I have to be clear about that. Also, I'll give you another little thought. Goldman Sachs really believes in gold right now. They for various reasons, particularly geopolitical instability, what's going on with the dollar, with the U.S. debt being so high, stuff like that. They felt like gold was something to consider investing in, and there is a way to invest in gold without actually buying gold bars that you have to keep in your house because they're all heavy and stuff. You can actually buy a gold ETF, and the ticker symbol is GLD. GLD. So feel free to take a look at gold. The thing about gold, though, is that gold doesn't usually make you rich. Gold pretty much just keeps you rich, right? It protects your money. It's a great store of value. It's not necessarily something that's going to just change your life and make you wealthy. So again, not me telling you what to do, but I am going to buy some gold to kind of keep it like Steady. Okay. All right. So let me see here. All right. Is that really Dame? It's a Dame Dash Rock Nation CEO. Thanks, Boyce, but keep your mouth out my business. Is that really Dame? How you doing, Dame? Good to see you again, man. I haven't talked to Dame for about 6 years or something like that. And Dame, just so you know, I have not talked about you at all. And I did see the stuff that kind of happened with the teeth and all that, but you know, I ain't got no comment on that. Now the ladies in the now the ladies in Fly Nubian Money, they have something to say. Now they do Fly Nubian Money every day. I don't tell them what to say, and they talked about it. I didn't even know they were going to talk about it. But yeah. So right now, in case you want to know, I think Dame is he's in the back and forth with 50 Cent, I guess, about TV networks or something. I don't really keep up with that. But anyway, I wish you the best with that, Dame. I haven't talked to you in a while, but God bless you, brother. If that's really Dame. All right. So anyway, all right. So and let's not make fun of him. Everybody gets old, and because I had to get my teeth fixed too, because I ain't 22 years old no more. I'm 53. But anyway, all right. So let's move on, guys. All right. So the last piece of information I would share with you in terms of what's going on with the market. Let's read a little bit more. It says here, mega cap tech stocks tumbled as investors dumped risk assets amid mounting worries about the health of the U.S. economy. A lot of your tech stocks got body slammed. So, and this is where you got to really be careful with investing. A lot of these stocks, they call these the Magnificent Seven. That's Amazon, Alphabet, Nvidia, Tesla, etc. They got hit pretty hard. And here's the thing: there is a strong consensus that these stocks are way overpriced. They're popular. Nvidia's popular. Everybody's talking about Nvidia and all that. Let me just tell you, there's a cost when all that attention is being thrust onto one particular sector. The Magnificent Seven is, according to most estimates, way overvalued, right? And so, if the market decline comes, if you got most of your money in these different stocks, they're going to get you're going to lose money. I'm not saying that you will for sure, right? I want to be really careful about making anybody think I'm making a prediction here, but it is my belief that there's a strong probability that you're going to get hammered, and you're going to feel like you got violated at a Diddy party. I'm telling you, you're going to feel like you just went through like all kinds of economic hell. So what I would say is, don't get overhyped about any particular stock. One particular stock should not drive your happiness or sadness about the market. You should not overinvest in any particular sector. You want to spread your money out. They call that diversification. That is the number one rule of investing, and that is the rule that you have to really stick to. So make sure you spread your money out. Get ready for the storm. If you made money on Nvidia, good. I made a ton of money. Our oldest son came into the kitchen when maybe like 2018. And he said, and when you're a bonus dad, like I'm his bonus dad, and I love him. I love him like a son, but he's got a great father. His father's a wonderful guy. We work together to raise these kids, and he comes in. He says, "Boyce, you should buy Nvidia." And I was like, "Why?" And he said, "Well, Nvidia makes the chips for the video games that I play." And I was like, okay, cool. Let's get some Nvidia. So at that time, like I think Nvidia is over $100 a share now. At that time, on a split adjusted basis, Nvidia was like maybe $6. So I was like, okay, cool. So I bought it. I just bought some shares. Didn't think anything of it. Thought nothing of it. I think I made about $4,000. I made about $4,000 worth. And then years later, I see Nvidia in the headlines, and I told my wife, I said, "Didn't we buy some Nvidia? Let me check." That $4,000 had turned into over 100,000 bucks. It was like, holy crap. Now, if you want to know what I did after that happened, my rule of investing is, don't be greedy. I'm not a greedy investor. I don't need to make all the money forever. I just want to make good money and then protect the money I have. See, a lot of people forget this about investing. Sometimes it's like football. I was explaining to my cousin, I said, what's the number one job of the quarterback? And he said, to score touchdowns. I said, no. It's the number one job of the quarterback is to protect the ball. That's the first job. Jalen Hurts will tell you that. That's why he lost the Super Bowl. Y'all remember that? When Jalen Hurts got sacked in the end zone, or sacked, behind the line of scrimmage, he fumbled the ball. The other team ran it in for a touchdown, and that's why they lost the Super Bowl. So if you don't protect the ball, then nothing else matters. So for a lot of us in our families, we lose our wealth because we don't protect the ball. You're so busy trying to get the ball down the field that you forget that you've got to make sure that you're secure before you make your move. So effectively, my goal with Nvidia was just to protect the ball. I wasn't really thinking like, oh yeah, I made 100,000. I can make 1 million. I can turn it into 1 million. Yeah, you keep thinking like that. That's how a lot of people lose everything. In fact, with investing, the reason a lot of people are anti-investing is because they invest the wrong way. They take these crazy slingshots. They invest in these ridiculous cryptos and obscure investments, or they'll get deep into stock options, buying stock options. And next thing you know, they're trying to do these quick flips, but they end up losing everything. Whereas I don't buy stock options; I sell them. And I showed my cousin. I said, I did this for a student just a few minutes ago. If you buy, 1,000 shares of Coinbase and you sell those options for $4 per share per week, then you're making $4,000 a week, period. And you can do this pretty safely. So I would almost say to you that um that the quick money is usually the fake money. The fast big money is a comfortable illusion. And I would encourage you to walk away from the comfortable illusion and maybe focus on the not so flashy reality. Right, the illusion is it looks exciting. It looks like, oh my god, I'm gonna flip this money, I'm gonna flip this thousand and turn it into 50,000 and all that. And Nvidia did that. Right, I put 4,000 in, it turned into 100. But that does not happen very often. That is very, very rare. So go for the little wins. Like in football, just run the ball, get to get that first down. Get those 6 yards of carry instead of trying to throw the ball down the field every time, and then you'll score some touchdowns eventually. And that's how wealth is built. Sturdy wealth tends to last. Uh, the fast, flashy wealth does not last very long. Okay. All right. So anyway, that's it, guys. Again, the stock for today that I like is Talos Energy, TAOO. Also, if you want to do the $7 trial membership in the Black Business School, you'll love it. Just go to b1accesspass.com. There's a ton of stuff on that page. My team put that together, and I was really impressed with what they did. And basically, it gives you a chance to get a taste of everything we're doing in the Black Business School, as well as all kinds of areas where you can build generational wealth. I mean, we're talking about stormproof investing. You get access to that. The Black Business Mini Course. If you're looking to make extra money with a side hustle or something like that, we've got that. The Stock Market Mini Course. I wrote my dissertation on the stock market, so I am a financial scientist. I'm not a financial influencer. I'm a financial scientist. I spent many years working on my doctorate. We have a stock options investing mini class. I told you all about options. Everybody needs to know about stock options. Also, let's see, we got an online community where if you want to meet like-minded people who are also investing, who are building wealth just like you, well, the best way to do that is to hang out with people who have the same mindset. You hang out with people that have the same mindset, then you don't feel weird because you're actually trying to build for your family. You want to be around people that are going to cheer you on, not make fun of you, not tell you that you're corny or that you're backward. We got a class called the 10 Commandments of Black Economic Power based on my book. How to make money. That's a simple enough topic. Stormproof investing, preparing for the stock market crash. The market is going to crash at some point. It always does. But now, when it's going to happen, nobody knows, but you want to be prepared. You stay ready so you don't have to get ready. You're proactive instead of reactive. Stock market decoded, myths and lies about investing that keep people broke. So there's so much other stuff here. So feel free to go to b1accesspass.com. It's a limited time offer, $7 a month, where you can try out a bunch of stuff in the Black Business School, and in like a big smorgasbord of food, delicious food that you can try out, except it's financial food, because my goal is to financially feed you, and I want to feed the masses, and I want to see you win. I want to see your family win. I want to see your generational wealth grow. All right, guys. So anyway, I'm going to head on out of here at 10 a.m. Eastern. As you guys know, every single day we do Money in the Morning economic consciousness training. So if you'd like to join us, you can also go to b1moneytips.com and get access to that. We're going to start that at 10 o'clock. And again, as I'm looking in the chat, I don't know if Dame is still here or not, but brother, I haven't seen you for 6 years. But God bless you, man. I hope you're doing well. And yeah, don't worry about that thing with the teeth, brother. I get it, man. I had to get my grill adjusted as well. So bless you, man. And I have a lot of respect for you. All right, so y'all have a good day. I'll see you guys soon. Take care. Peace.